Hello everyone, it's Marianne here from realty8.ca, and I wanted to address something that I think has been a little bit of a topic in the market, and it's mortgage changes come into effect April 19th. And I just had a pretty extensive conversation with about 3 mortgage brokers to kind of fill me in on what's going on, because it's always good to hear it from a perspective from the financing side, just because there's so much hearsay and so much things are up in the air right now. And I guess the main points that I want to stress upon and how it's going to affect buyers and homeowners is, one, this is the main thing that's going to change, is for buyers to be approved now to get financing. They have to be qualified for a 5-year fixed term rate on the posted rate, as opposed to being qualified for either whatever they're looking for, just because, let's say for example, 1 and 3-year fixed term rates are lower than the 5-year. And so a lot of people are applying to get that type of loan. But the government of Canada wants to prevent, I guess, a lot of activity that happened in the States and to prevent that from happening here in Canada. And so we want to make sure that people who are getting financing are actually able to afford it, and in the essence afford something that's the 5-year fixed rate, because that rate is higher than the 1 and the 3. So it's going to be more difficult for buyers to get approved now, because there's a huge difference between the 5 and the 3-year rate. For example, this is just for numbers sake, 3.5 is the 5-year fixed rate, and 5-year fixed rate is 5.5. There's a huge difference between somebody getting approved for 3.5 and somebody getting approved for 5.5, because there's that 2% difference in interest rates there. So it's going to be a lot more difficult for people who are just on the fence of being able to approve for a mortgage now. They're not going to be able to get that dream home that they want. And for first-time home buyers, for example, it's going to be a lot more hard for you, unfortunately. And the way of things being conducted in terms of getting approved have changed. You no longer can go to your bank and find out. I mean, you can, but it's not as easy, and it's not as accessible as before, when you can go to your bank and get your pre-approval and they hold that for 3 months. No, a lot of banks now, because of the crunch time between now and April 19th, they actually want to see a contract of purchase and sale in place before they can give you a yay or a nay. So a lot of deals are falling apart because buyers find out later on that we're not going to get approved for this amount. So that's one thing that I really want to kind of relate to everybody, because I don't want to hear from buyers down the road a month from now or 2 months from now saying, Marianne, we couldn't get that home because we didn't know about these mortgage changes and how much it would affect us, because it's really going to affect buyers that are just kind of on the borderline of being able to get a home or not. And secondly, people who want to refinance or remortgage their property, you are no longer able to get 95% equity of your home. It's 90%. So there's I guess less of a cushion now in what the bank expects from you. It used to be 100% where you can take 100% equity out of your property. No, now they expect 90% as opposed to the old 100%, and then recently the 95%. Now it's 90%. And again, the government in Canada just wants to prevent such things that happen in the States happening here, because yes, we've had our foreclosures, but we haven't had nearly as much as the States has, and I guess they're just trying to implement as much as they can to prevent that. And lastly, for investors, so if you want to buy another property and have it for rental purposes, you are going to need a 20% down payment as opposed to the 5% down payment. So let's say I have a condo and I want to buy another condo and rent it out, and it's going to be recorded as an investment property. I am going to need 20% down now as opposed to 5%. So that is going to, I guess, decrease the amount of people who are eligible to buy investment properties. And I never have a crystal ball in what's going to happen, but most likely there's going to be less buyers out there. But the buyers that are able to buy, it's just going to weed out the ones that can and can't afford their mortgage down the road. And in essence, hopefully investors will still be able to invest in our market, but who knows? Let's keep our fingers crossed. In addition to that, we do expect another interest rate hike. I mean, Mark has said that the interest rates are supposed to be held until June, but they are saying that they expected maybe to hike as early as April, and we should expect something at least by December the latest, a interest rate hike from 2.25% prime to 2.5% prime. Again, I am not a mortgage broker. I am just a real estate agent. So if you have any questions pertaining to any of the above and want to get any clarification, please feel free to contact your mortgage broker. Or if you want, you can go to Leah Koss's blog. She has a video blog, and she also explains in depth how kind of the changes. And if you have any questions, comments, concerns, you can feel free to contact her as well. My number here directly is 778-999-5472. And again, that's 778-999-5472. And you can also email me at homes@realtyaid.ca. And I hope you guys have a great day and make it count.